Hello, everyone, and welcome. I am your newest coach, Rachel Deschelle, with Schwab Trading Services here. And please definitely give us a thumbs up and subscribe to our Trader Talk Schwab coaching channel here. I'm joined today by Brent Moores in the chat. You can give him and I a follow on X, Brent Moores CS and Rachel CS. Now, why stick around today? Well, today we're going to cover and scout for some sideways patterns and really trade some of those range breakouts. So before we get started today, let's just get into the disclosures a little bit. So options carry a high level of risk and are not suitable for all investors. The information we're going to cover here is for general informational purposes only, should not be considered any type of individual recommendation or personalized advice. And we teach a lot of technical analysis today, but other approaches, including fundamental analysis, may assert some different views. And we are going to use a version of the Paper Money software. It's for educational purposes only. It's going to have some pretty big differences between a live and a paper, so keep that in mind. Now let's get into our agenda for today. So there will be a little announcement. We'll do a market overview. We'll review our past trades. We'll place new example trades by looking at patterns. And then we'll give you some new setups that may be on the horizon as well. Now, for the announcement, we have our upcoming workshops, market drive events. I know these are coming up really soon. We have our market drive next month, November 22nd, Houston with our 2-day trading workshop, December 11th and 12th. And then the Miami Advanced Options Workshop on December 19th and 20th. I will be at the Houston and Miami events. So if you are going to be there, holler in the chat, and then we can definitely say hi at that event. So let us now dive into Thinkorswim, and let's take a brief look at the market. So starting with the Dow Jones Industrial Average, we've really seen price breakout of this megaphone type pattern or broadening pattern, which is a version of like a triangle pattern, just showing that heightened volatility as time continues. We had a few gaps up in price, really breakaway gaps that broke out of that old resistance, kind of looking at the start of a new trend. So that really speaks to just the strength of the trend that we've seen after that minor pullback, minor consolidation. We've just kind of chugged forward, gained a lot in the last few days of trading. Now with the NASDAQ, speaking of ranges, because we talked about sideways patterns, we had a little bit of a sideways pattern in the NASDAQ composite over the last month and a half or so. And if I just do a measured move from this range, I'm just going to take the high low of that candle, and whoops, where's my cursor going? And then I'm going to move that measured move to the upside of what a range breakout would look like. And what do you know? Today we actually touched that level of reaching our range target price, which it's kind of funny that it took, I mean, we talked about like over a month to form this range, and typically time aligns with price. And typically we would see if it took a month for that range to form, we would possibly see a month for that target price to take place. But it did that in a matter of 4 trading days, which again speaks to the strength of this underlying trend that we're seeing in a lot of the indexes. So next one we're going to go to is the S&P 500. Same type of pattern that we saw on the NASDAQ, almost identical. We had that breakaway gap, which was that gap above resistance at the start of a new trend. Again, just speaking volumes to the strength of what we've seen. Let's look at our measured move here when we take the depth of this range and project it upwards north of our breakout point. So we can kind of see here, we're not yet at the target price yet. That's going to be right around like 69.70 or so. So that may, I mean, we're not too far away from that level, but that may be where traders are looking forward as far as if this bullishness continues. Obviously, we're going to have a big announcement here in about an hour with the FOMC meeting. So obviously a ton of things that still have to take place, but that's kind of what we're seeing there in the major market indices. Something else interesting, and these are a couple fun charts to bring up, just looking at the strength of the overall move, not just across those concentrated pockets in the market, but really across the market in general, looking at the overall breadth of some of the equally weighted indexes. And the Dow Jones equal weight is making new highs. We have the NASDAQ 100 equal weight that just made a new high yesterday. Excuse me. And pulling back a little today. And then we had almost the same level of highs in the S&P 500. We have a little bit more of a pullback to that 20-day simple moving average on the equal weights there. Okay, so now that we've finished our market overview, let's look at some of our past trades. I'm going to pull up CCL at first because this is one that we purchased some of our shares of stock when we had this big bullish engulfing candle at support. And ever since then, we had a little bit of a run up. We had a little bit of a doji candle right there that signaled to us a possible pause in the trend, a possible reversal. And we saw that reversal here where it's dropped and gapped below that 20-day simple moving average. And it's again catching support here. Our stop for those 210 shares is at the lows of that bullish engulfing candle. So obviously our stop has not been triggered yet, but something that we're going to keep watching here and seeing if price can bounce from these support levels or if it's going to break through there. And then a couple last week that we placed a couple trades on, we had BABA where we had a short put spread because we saw the pattern that was taking place of this 20 period simple moving average really steepening out. We saw that it hit resistance and then backed away from it. But we also saw a bear flag formation taking place at the same time. And we put our alert to signal us to possibly exit or possibly reevaluate that trade at that 20 period simple moving average. And that was an alert that got triggered. It's obviously moved and put our option because we had our short strike at 180. So it definitely put us at a little bit of risk. So I closed out that trade today. The other reason why is because when we have a move like this, where we have obviously that down move in the bear flag, to call it a flag pattern, we typically don't see a deeper retracement than half that initial move. And if we just look here, we can see that obviously that is a much deeper retracement than 50% of that move. So that was kind of another indication to me that this trend could be changing. It's not really looking like a bear flag anymore. So I closed out that trade at a little bit of a loss there. And then let's look at CRM, because that was another one that we placed a trade on, another bull put spread. So what we saw was this descending triangle pattern. We placed a trade on that breakout last week where we saw that big green candle there, and I'll zoom in a little bit for you here. Placed a trade where we saw that breakout of the trend line. We saw that breakout then following just another major move higher on CRM. So we took that bullish trade, but we kind of noted that we would have some type of new support, old resistance here to keep in mind. And so we placed a alert right at that level, right around 254. We obviously gapped down to that today, back to that trend line support. So I closed out that trade, took a little bit of a loss just because we are kind of retracing that move. We may enter him back into the pattern and put our prices in the money in that case as well. So let me see. Okay, so that was all the trades that we had to review. Now let's talk about a couple new trades. So since we're looking at ranges today, I'm going to pull up Wells Fargo. Wells Fargo, we have a bit of a range that's occurred over the last few months or so. Really, I mean, since the midsummer, so mid-July, we really saw this support level taking place at 76, 77, kind of that zone around there. And then we saw the upside or the resistance right around 85 or so. So if we were looking at where this could possibly break to the upside or continue its break to the upside, since it has had multiple closes above that resistance level, let's just take that measured move real quick. And from highs to lows and putting that near the breakout point, that gives us kind of that next target price right around 94.42 or so. So kind of right in that range, because that was obviously close to a $9 range. We will kind of look for $9 to the upside over the next few months to really kind of take place here. Now, this is another thing that I kind of like to do when looking at charts. I know a lot of technicians do this, is they may look at a longer time frame and then they may shorten their time frames to look for entries or maybe other patterns that are taking place on that shorter time frame. So I'm actually going to switch to the Wells Fargo chart, and I'm going to remove these drawings, clear drawing set, and move to the 20-day hourly. And Chris, yep, that bearish Harami was somewhat accurate in I think it was CRM that we were looking at. I think I remember you calling that out last week, actually. But yeah, and then as far as BABA, I know earnings was kind of coming up with BABA, so that was something I wanted to keep in mind too. But now that we are looking at this shorter term chart of Wells Fargo, let me know what pattern that you guys are seeing here on the chart, because I see something similar to resistance around 87.32, and kind of giving you guys a chance to respond in the chat there. And then I am seeing those higher lows take place of much more of like a ascending triangle, almost in this case. Now you could call it a pennant. This would be, in that case, I like to call it more of a triangle in this case, just because of how elongated the pennant type of formation is, because usually it doesn't last too long or spread out too wide. And on a daily chart, these pennant patterns, flag patterns take place over 2 to 3 weeks or so. But in the shorter term, you kind of have to look at it with kind of the time compared to the time of that initial move. So in this case, I kind of just like to look at it as that easy ascending triangle pattern, and we are hanging right below resistance there. Now, if we wanted to place a possible bullish trade on this, given that, I mean, if you did call it a pennant, the general trend is up. We've obviously had that break on the longer term of that overall range. So if we wanted to look to the upside and just see where we could place this possible target price, I'm going to take the measured move of the base of this triangle when it started forming. And let me draw a straight line there. Perfect. And I'm going to duplicate that drawing and add it to the breakout point. So that is let's see if I can hover over this, it'll tell me. Maybe I'll hover over this one. It'll tell me at the top. So that's about a $5 move in this, and this was just from the 15th. So this was really within the last 2 weeks that this ascending triangle pattern has formed. So that may tell me that it may take about 2 weeks for it to reach this $5 move to the upside right above 92.50 or so. So if I was going to take a bullish trade, which I am in this case, I may look to target that area to the upside right around 92.50, 92.60 or so. Now, yep, I see in the chat, Wells Fargo did well after earnings. Yes, they did. And the other thing about earnings, now since earnings is over with, obviously there's not going to be high volatility in the stock. So I think it gives us a little bit of a chance to take really a long call trade. So to really test out our bullish thesis, but not have to necessarily buy 100 shares of the underlying stock, but use that rights of the option to do that by buying that call option and maybe using our price targets to the upside to kind of formulate that. So let's just talk about where our entry would possibly be for this options trade, and we'll get to the options trade details in just a second. But we talked about our profit target being right around 92.60 or so. I would like to think that we would wait for confirmation above that resistance line, maybe a 1% move beyond that line, which is so above 87.40, looking at a 1% move. That would be like when the stock is 88.27 or so. So that would kind of be our entry, and maybe that's when we would take our long call trade. Now, we talked about the time that it took to reach that. So that was about 2 weeks. So let's look far enough out in time just to make sure we don't have the time decay that we would see over a 2-week period. We still have enough time to close out our option without much time decay. So I'm going to look at the 19th of December, 2025 with 51 days till expiration and take a look here at the prices of the options. Now, let's see what we can do here. So we have some tight spreads in these options, obviously, because if you look at the open interest, there is thousands of contracts in open interest. There is definitely a good amount of volume even today as well. So we're not going to have an issue with just finding a tight spread, liquidity in the options, fun things like that. But let's take a look at just the kind of this slightly in the money option here, right around the 85 strike. That gives us a 62 delta, which is really telling us that if the stock goes up $1, our option is going to move up 62 cents. We're not going to have a ton of time decay with our theta, and we're going to have a really, pretty low sensitivity to volatility as well. So let's craft this order. We're going to do a buy custom with OCO bracket because we kind of gave a little bit of our targets to the upside. We're going to talk more about our stops to the downside as well. But let's look at what our entry could be for this option. Now, we talked about how it's pretty liquid, so we have a pretty tight spread in that case. So we're going to enter using a market order. Now, the risk with that is, I guess the benefit of it first is we get immediate execution whenever our stock price is met from our entry. The downside of that is obviously we don't know what the option is going to be when the price of the stock is XYZ. So that's kind of something to keep in mind with a market order, obviously. But let's take a look at placing a conditional order off of this option. So if we look at the gear to the far right-hand side here, and we use our example conditions, Wells Fargo market price is greater than or equal to, and we looked at the break of that ascending triangle being a 1% move above that resistance would put us at 88.27 roughly. And we're also going to cancel this order. We're going to put a cancel condition. If this doesn't get filled within the next week or so, we're just going to cancel this order. So what day is today? We are on the 29th. Let's just say we're looking at the 5th because we were very close to resistance. It's obviously been a short-term pattern, so we're just going to cancel it within 1 week of today. And if it doesn't get a fill, we're going to hit save here. Now, let's also change our first order or our first sell order, which is going to be our upside target. Let's change that to a market order as well, because we talked about placing a target based off of the price of the stock. Now, we don't know what the price of the option is going to be then there, but we are trying to trade this pattern, trying to catch some of that $5 move to the upside over that short period of time. So let's just do the same thing here. So when Wells Fargo is greater than or equal to, and what did we say it was? 92.60, I think it was. 92.60 was what we were looking at for our upside target. So when Wells Fargo market price is greater than or equal to 92.60, we want to take profit there. Now let's look to our downside stop. Now our entry is obviously going to be right around 475, 480 or so. We're going to try for that midpoint of 470. But let's just say we wanted to protect ourselves to the downside, manage our risk to say if we lost 50% on this option. So 480 divided by 2 is 240. And we still want to stay within the parameters of our account as far as risk and things like that. And we talked before about how we can risk about $1,200. We can take a position size of about $6,300. So if we want to bump up this number of contracts, we can definitely do so. We can bump it up to 5 in this case. Let's just take still a small trade there. And then that way we're not risking more than that $1,200 to the downside. And then let's make these good till canceled. We're going to make these all good till canceled. And everything looks okay. We're going to confirm this one more time. So we're going to buy 5 contracts of the 85 strike call. When it's at or above 88.27, we're going to cancel it next week. And let's look at our upside. We had our upside targets of 92.60, our downside of a 50% loss, all good till canceled. So everything looks okay to me. I'm going to hit send on this order here, and we're going to just see if we get a fill. And if next week on the show, if we don't get a fill, obviously our order is going to be canceled by that time. So we have that price pattern trade in. Let's look at another fun one, and I want you guys to tell me what pattern that you are actually seeing here on this chart of Hilton. So you may like Hilton hotels, you may like Marriott hotels, whatever it may be. I'm definitely Hilton turning to Marriott, especially with some of the events that we're doing where I definitely stay in the Marriott hotels a little bit more. But what type of price pattern are we seeing here? Well, I see a couple different things. I see obviously this well-defined zone of support there. And yep, I see Chris threw in the chat, you see a triple top. Yes, we do. So we see one top here, another top right there, and a third top. So we have a triple top pattern, which by nature, I mean, this is also technically a range. We're obviously seeing that price on the upside of resistance being touched multiple times. We're obviously seeing that level of support being touched time and time again. And actually with range patterns, the more that those upper and lower trend lines or zones are touched, the more valid that type of pattern is. And so that's kind of something to watch too. Obviously, it is a triple top pattern. We're still going to measure it in the same way that we would a typical range or like a double top pattern. So what I'm going to do with this one is we're going to take this this high to the lows, and we're just going to kind of measure this out. Now, this is a bearish reversal type pattern. So we're going to take a bearish trade on Hilton in this case. So a very directional trade, since this is a bearish reversal with a triple top. So typically with a triple top, we obviously see it being formed at the tops of markets, which in this case it is. Even if you look at the long term, this is a top in the market here for Hilton. If this type of pattern was forming like here in the middle of a range or kind of down here, we may say it was more of like a continuation type pattern, but in this case, since we look at the context of the underlying trend leading up to this pattern, it's looking like it would be that possible bearish reversal. So I'm going to project this downside target all the way past our support level, placing us right around 233 or so. So I am going to make this, I'm going to make the note of 233, because if I don't write it down, sometimes I'll forget it as we're going through these trades. And where will I look for confirmation? Well, we don't have confirmation yet because this pattern is still, or I should say this possible pattern is still taking its time to really form. We're not going to see this pattern really complete unless it breaks below this neckline support. And I really like to look at a 1% break below the neckline. That way you get a little bit of that move beyond the neckline, not just a couple pennies or so. But you're also not missing a large percentage of the move either. So that 1% around the neckline, which that neckline is right around 256.96, kind of right around that level. If we take 256.96 and multiply that by 0.99, we get 254.39. 254.39 as our possible entry. Okay, so now let's take a look at something else. This pattern took a number of months to form. So it was really the end of June that this started to take place. And now we had a few touches, obviously, and now it's the end of October and we're looking pretty close to that support break. So that's about a 4-month-long pattern that is taking place. And so I'm going to think about that as I'm crafting my strategy of just kind of looking at the time. Now, since I want to be really directional with this trade, I already checked a couple things like earnings just happened. We have a lower implied volatility. We do have some time that we could take. It's obviously given us quite a bit of touches, giving us the validity of that pattern. So it gives me enough conviction to take a bearish move in this stance. And I'm going to buy a put in this case, just kind of lumping all those different factors together. So when I go to the trade tab and look at all products, I'm going to look at building a long put trade. So if it took 4 months to form, I want to look at least 4 months out and maybe even give myself a little 30-day buffer at the end of it, just because that's when time decay really kind of starts to kick into high gear there. So I'm going to look all the way out to March, the 20th of March, with 142 days left until expiration. I'm going to collapse this left sidebar here. And we're going to look at a few things. Now, something I noticed right away, because it's a little bit further out in time, there is not too much volume on any of these contracts today. So that's something I definitely want to keep in mind. That could contribute a little bit to the wide spreads there. But the other thing I could look at that is probably more important there is the open interest of some of these contracts. We have definitely a ton of open interest or open contracts that haven't been closed out, haven't been exercised yet in Hilton for the 20th of March. So what I may look for is I may look for a little bit of a tighter spread, looking a little bit more in the money. And so I think I'm going to take a look at the 270 strike put in this case. It still has 193 contracts open, so still almost a couple hundred there. We have a little bit of intrinsic value there, obviously with this one. And I'm just going to take a buy custom order with OCO bracket, just like we did on the last one. And we're going to do a similar type trade. So I only want to take this trade if price goes 1% below that support break. And so what I'm going to do here is I'm going to take this little gear on the right-hand side, and do the same thing like we did before. So when the mark price is less than or equal to, what did we say it was? 254.39. Good thing I wrote it down this time. And now something we're going to do differently with this one. I know we did a market order on the entry for the other one, but what we're going to do is actually, because the spread is just, I mean, close to that 10% type of width, we're going to enter this order using a limit offset. So instead of linking our limit price to the manual price of the option, because obviously if the price of the stock goes down to 254.39, our price of our option may be a little bit different than 2040. So what I'm going to do is actually link the limit price of our option to the mark price. So I'm going to scroll down and look at the mark price, which is basically that midpoint of the option. I want to kind of look towards the midpoint and kind of start there, just because I do want to get a little bit more out of that option in that case. So we're just going to say we are wanting to buy this option and give ourselves a little bit of a buffer, because we're never due a fill at the midpoint, but we kind of want to start our price discovery at the midpoint. So I may ask for a limit price that is roughly, let's just say, we're going to just say 30 cents above the midpoint. We'll give it a little bit more room. We'll say 40 cents above, or no, we'll go 30 cents above the midpoint, just to still have control over the price of our entry on our option, but at the same time giving ourselves a little bit of a buffer from where the midpoint would be to where the ask price would be. So I'm just going to hit save on this part of the order. I'm going to make that good till canceled as well. And then we talked about our downside really being for just kind of our target for taking our profit, really being around, what was it? Let's look back. 233. So 233 to the downside, which is that nearly a $23 move to the downside. So I'm going to take this gear to the right-hand side, put Hilton less than or equal to 233. And I'm going to do the same thing with my my price rules for the limit offset here. So I'm going to take a limit price to have more control over the price when we do exit, because we don't know what the price of the option is going to be, or when the price of the stock, when and if the price of the stock is going to hit 233. We're going to make that limit offset, and since we will be selling this option, we are going to go 30 cents below the mark, just to give ourselves a little bit of a buffer there. And then I have a couple questions in the chat here as I'm kind of creating this order. One asks how mark price is different than ask and bid in this case. So the mark price is the midpoint between the bid and the ask. So if I just hit save here, I will just kind of show you. Now, our midpoint for this one is probably around like 1920 or so. It's just taking the average between the two, or the midpoint between the bid and the ask there. So if it's 1920, and that's kind of like the midpoint of what we're looking for on the entry, that's why I'm giving myself such a much larger offset to say whatever the mark price is at the time that this order would execute, we're going to ask for 30 cents more. We're not going to ask for the current asking price just because it is a little bit of a widespread, but we're going to ask for a little bit more than the midpoint to tilt it kind of in our favor of getting a quick execution, but still trying to get a good price with our price discovery there. And we did the same thing on the other side as well. So let me see. If there's a wide bid ask spread, does the mark limit need to be much higher? It can. Yeah, it definitely can. So in this case, that's why I put it about 30 cents higher. You know, you could go to 40, 50, whatever you feel comfortable with in this case. Now, if you want to set it, walk away, I would definitely place an alert when the price of the stock is getting closer to your strike price, so you can kind of, or when the price of your stock is getting close to executing that order, or getting just an alert when, I guess an alert when the price of the stock goes to that conditional order level. Because if you're away from your computer, you obviously can't look at this and look at your price discovery, look at your order all day long. There are some of us that are in front of our screen for quite a bit of time. So for someone like me who's in front of this screen all day, looking at Thinkorswim, looking at the markets, I can take a look at when my order would possibly trigger and then where I would need to adjust my limit. So honestly, that is really up to you there. And then let's see. Okay, so, and then we're going to also look at our kind of stop to the upside here. So what I'm going to look at is we're going to look right at, let's say, a 50% stop on this option. So if we just put this at $10 for our stop on this option, in this case, so we're buying it, I guess, no, what we could actually do is look to see, in this case, where could be a better price for the stop of our option. And it could be if price enters back into this pattern. I think that may be another better stop for our option. So let's put our stop when it enters the pattern, if it does enter back into this pattern and it moves 1% beyond that pattern. So we said our neckline was around, what did we say it was? 256.65. Let's just say it's 256.65. Oops, my calculator needs to clear out. 256.65. And let's just multiply that by 1.01. And that would give us a stop or an exit right around 259.21. So 259.21. I'm gonna write that down. Okay. So and the reason I'm doing that is because if price re-enters the pattern, obviously it's kind of like a failed pattern in that case. And a lot of times, and I know Brian Shannon, one of famous technicians out there, always says with failed moves come fast moves. So if price breaks down a little bit below this and then moves back into the pattern, obviously that's a failed move, and it could suggest that it may move quickly in the other direction. So we want to get stopped out quickly if we're wrong. So what I'm going to do is go back to that trade tab, change this to a conditional order based off of the stock yet again. We're going to say Hilton mark price is greater than or equal to, we're going to say 259.21. And we could also do our limit offset here. Let's just make this based off of, where did the mark go? Okay, based off the mark, and this is yet another sell, so we're going to take minus 30 cents here. So similar to what we've done before, we're saying that whatever the price of the midpoint is in this case, we're going to place a limit order that is 30 cents below the existing midpoint of the option because of those wider spreads. So we're going to hit save. And we're going to make these all good till canceled. Okay. And then we're going to hit confirm and send and take a look here. So mark price at or below with the 1% breakdown. This is our target price to the downside. This is if we move back into the pattern, makes it a failed pattern with a 1% move above that neckline that we are assuming that we will break out from. We are going to hit send here. We're just going to do one contract of that one. Okay, so we have those trades in, and now with a couple minutes left, I just want to go through some other price patterns. This is kind of something I like to do at the end of these sessions here, to just kind of take a look at what we could be looking at in the future. So I know we've went over this one before, Palo Alto. This is one where we saw that inverse head and shoulders. We saw the neckline being formed really around 208 or so. We still are mid breakout for this one to the upside. And so if you could just kind of take that measured move from highs to lows of the head, project that upward, you can kind of still see where that trend could be playing out. Obviously, this has taken almost a year to form, so something to keep in mind. Now, the Laro is one that I was also looking at too on a shorter time frame. So I actually noticed on the 90-day 4-hour, noticing a little bit of a flag pattern that is occurring here. We're obviously seeing that perfect little channel, and from highs to, or I guess from lows to highs, nearly a $19 move there. So take that, project it upward in that bullish continuation, and that could be where you get your target price for those intraday traders there. Now, another one keeping my eye on is actually Bank of America. It's had a few different rangy patterns. It's waiting on a breakout there. And then let's look at a couple stocks ahead of earnings. So Microsoft ahead of earnings. We're going to look at the shorter term chart for this one. So let's go to a 20-day hourly. So this is obviously a stock. It's had a massive basing pattern taking place, or what we call like a bowl or a saucer shape. And so I know a lot of traders, when they're trading these patterns, they take Fibonacci retracements from highs to lows of that move to really forecast some target prices to the upside. And what do you know? This 200% target price has been reached, which is really just that depth of that bowl-shaped pattern added to the breakout point, which is another one of those rules that we typically see. We've had a little bit of a pullback, almost like a bear flag type, where we see a little bit of a pullback to that 161.8, and then we're seeing that move over a lower. So we may catch support here, resistance to the upside there. And then lastly, we'll quickly go through Amazon here. Since we talked about ranges a lot today, we're seeing another range here. This isn't quite a double bottom pattern, just because in the context of the trend, it's occurring at an uptrend. So we consider it that rectangular shaped or box shaped pattern. And ahead of earnings, it is looking like it is moving to the upper bounds of that area. And so if I just take that quick drawing, move it to the upside to say if there may be a breakout, we may be looking at 264 or so. So in that case, those are just some patterns to look at. We did a lot today. We looked at the markets, we reviewed our past trades, we kind of corrected where we were wrong. We entered in some new trades, looking at some of those range type patterns, and then looked at some future patterns for possible breakouts in the future as well. And I just want to say thank you to all of you for your engagement in the chat, your questions in the chat, and thank you to Brent that is also answering all those questions. He has been busy today. And thank you for our production team behind the scenes that puts this all together. If you did like this video, and if you'd like to see more of trading price patterns, please definitely give us a like, a thumbs up. Please follow our channel and subscribe to our channel on YouTube. And then if you'd like to see more chart setups, this is something that I post almost every single day on X. So please follow me on X at Rachel-CS. I know Brent does the same thing at Brent Moores CS. And stay tuned for our class that's up next, which is getting started with Think or Swim with Cameron May. And I just want to thank you guys all again. I'll see you next week.